Dumelang. Today I will be doing creditors reconciliation, but I will start right from the beginning, okay? And what is creditors reconciliation? And that's where I will start. I will start by explaining important things first, okay? Credit purchases. Credit purchases is when goods are bought on credit from the supplier, and the supplier will basically send an invoice to the entity. So when goods are bought on credit, the supplier will send an entity an original invoice. The supplier sends the original invoice and keeps the duplicate invoice, which is just a copy. The original invoice received from the supplier indicates the item that have been purchased and the total amount owing and trade discounts, if any. Remember that when you calculate the cost price of the item purchased, and that has to be recorded, it has to be recorded at an amount net of trade discount. So basically the cost price of an item will be the price of the item purchased, and then you minus trade discounts. Price of the item purchased minus trade discount. When we record the transactions in the book, in the books of the entity, how do we record credit purchases? Please note that credit purchases will be recorded when the original invoice is received from a creditor, and those will be recorded in the creditor's journal and the creditor's ledger. Credit purchases will increase what we owe the creditor. Therefore, it will increase on the credit side. The account of the creditor in the creditor's ledger will be credited whenever the entity buys goods on credit from the supplier or creditor. When we return goods to the creditor, in our books, how do we record that? The business will send an original debit note to the creditor for goods returned, debit note with goods returned or allowances requested. In return, the entity will receive a credit note from the creditor or supplier, which will indicate whether all or some of the returns or allowances have been approved. Now, a debit note or a credit note for the approved returns or allowances will be used as a source document to record the transaction in the creditor's allowances journal. So when we return goods to the creditor, we'll record them in the creditor's allowances journal. Each entry will be posted to the debit side of the respective creditor in the creditor's ledger. Debit note simply informs the creditor that the account has been debited, okay, reduced. Remember, when you debit the account of a creditor, we are reducing it. We are reducing what we owe to the creditor. When we make payments to the creditor, the payments to the creditor will be recorded in the cash payments journal, and the creditor's control will have payments as well as discount received, and it will be recorded on the debit side of each creditor in the creditor's ledger. Okay, now how do we record the transactions from the supplier side? Please note that the supplier sees us as a debtor. Therefore, credit sales from their side will be recorded in the debtor's allowances journal, and each entry will be recorded on the debit side of each debtor, which is the entity in the debtor's ledger. The creditor will issue an original invoice and use a duplicate receipt to record the entry in the debtor's journal. When we return goods to the creditor, what are they going to do in their books? In their books, they will simply record it in the debtor's allowances journal of the creditor. Each debtor's account in the debtor's ledger will be credited by the amount of goods returned. The creditor will use the credit note issued to the debtor to record the transaction in the debtor's allowances journal. Credit note informs the debtor that their account has been credited. Now, payments by the debtor or the entity. Payments by the debtor will be recorded in the cash receipts journal. Each debtor's account in the debtor's ledger will be credited by the amount received. And this is what I just need you to understand at the moment before we get to the comparison between the entity and the creditor. And obviously, we spoke about the debtor's ledger as well as the creditors ledger. From the supplier's perspective, we are the debtors. From our perspective, the supplier is a creditor. Please check out the next video as we continue explaining creditors reconciliation.